Greetings everyone, Joseph James here once again with your nightly newsletter brought to you by SchoolofTrade.com. Today was October 21st, 2009. Another one of those kind of funky days in the market, guys. And before we talk about our trades we took today, I want to give you guys an important announcement. We have suspended our 3 a.m. Euro session. Right? We usually open up our trade room for the 3 a.m. Eastern Time European Open. But due to low volume, we've decided to suspend that and spend more time working with our clients in the U.S. session. We will resume when volume returns to the 3 a.m. Eastern Time Euro Open. As soon as we start seeing the volume return, we will open that session back up to you guys. If you have any questions, please contact us accordingly. Check out our free resource online. Go to our YouTube page, and that's /School of Trade. While you're there, guys, please subscribe to our YouTube channel so you get all the new videos when they come out. And please rate and comment on this video. Let's keep moving. Our trade room totals today. We took $80 out of the market today. This has been a very funky week, hasn't it, guys? Kind of a funny week here in the markets we trade. Monday was a no trade day. Yesterday we went 3 for 3, made 520. This morning took one winner, one loss, then another winner at the end. So it was kind of a back and forth day. Very choppy price action. Of course, we'll talk about that a little bit later on. Weekly total today: $600 for the week, $6,600 for the month, and of course just over $46,000, guys, for the quarter. And we'll keep you guys posted here for the rest of the month of October. Now, of course, the term of the day today, we're talking about these 7 deadly mistakes we make as day traders. And of course, mistake number 3 is the fear of losing, or the fear of taking a loss. Right? Why are we so scared to trade every day? Well, it could be obviously because it costs us money whenever we make a mistake. And that loss, right, that cost of money is usually that catalyst that affects our purest emotions of fear and greed, right? Losing money or making money really gets us going. And of course, having the fear of taking losses or the fear of losing is a very big mistake to make. But it's usually somewhat simple to solve. What's causing us to be so afraid every time we take a trade? Well, it's usually the lack of confidence in our entry setups, in our entry rules, and a lack of consistency in using those rules and setups every single day in our live trade room. We have new guests that come in every day. They sit down, they ask questions, they get the materials they need, they get the setups, the patterns, the rules, the charts, the indicators, the templates, and when they come in every day with consistency, they develop that confidence they need to get away from that fear-based trading. There's a huge cost of that fear. If we are scared of taking losses, we have very high percentage setups. Our rules will keep us out of the bad trades, put us into the good trades. But if we can't get over that fear, there's a big cost for it. The cost of that fear is, of course, you'll be quick to exit a winner. If you're scared to take a loss, you will inevitably get out of that trade as early as possible as soon as you see some money on the table. So you'll end up exiting early on a winner rather than letting your winners run. You'll then begin to make excuses when you're about to take a stop loss. Well, rather than letting the market go right into your stop loss, guys, there are so many better ways to do this. Now, of course, we can't make excuses, right? We got to keep that initial stop right where you planned it ahead of time. So no pushing that stop back, right? That's a big cost of fear. But of course, another big cost of fear is that, of course, we're not going to be able to cut our losses. It's important that we are aggressive with our defense, and when we know we made a mistake, right, cut that loss early and get out of that trade. Cutting our winners early and letting our losses run, or getting out of a winner a little bit too early because we're scared of taking a loss, failing to cut our losses early, letting it really fill your full stop loss, guys, that's not going to help your risk-reward ratios, and it's going to produce pretty lackluster results in the long run. Okay, now, so of course, how do we limit our losses, right? How do we get around this? Again, we want to be aggressive with our defense. So just like we want to look to take money out of the market, we want to avoid heavy losses as well. So when we see we make a mistake, for example, this morning, I knew right away I made a mistake. I'm going to show you guys this mistake I made today on the Russell. But we made it, as soon as we make a mistake, get out of that trade. Okay? So we want to be aggressive with our defense. The minute we know we've made a mistake, get out of that trade aggressively. Always use a protective stop, right? This should be kind of a no-brainer. Everybody knows that, right? We all use protective stops. And know where that stop's going to be placed before you take the trade. So you need to make sure that you know exactly where your parameters or where your stop's going to be before you place the trade. We use a trailing stop to manage a moving market. Okay, you want to obviously trail your stop to, of course, avoid losses, limit risk, and lock in profits. And one of the biggest things is you want to automate this, right? Make it fully automated. Remove the emotions from your trading. This, of course, is essential for long-term profitability. So we want to fully automate this system so that once we get into a trade, the stop loss is automatically placed for me. It's automatically moved up to my point of entry or 5 ticks back, whatever your ATM, whatever your trade management strategy says. But you want to automate the use of your stop. That way there's no thinking involved. There's no way that your mind can start tricking you into pushing your stop back. There's no way that your emotions can step in and make you start to second guess your trailing stop. So automate it to remove the emotions and stick to your rules, guys, right? Place your stop ahead of time. And of course, limiting your losses is essential for your long-term profitability. Okay, so come in every day, build confidence in your entries, confidence in your rules, and use those rules and those setups with consistency. That will build your confidence, and that confidence now will allow you to be aggressive with your defense, right? It'll allow you to use it prior to taking your trade. And of course, it will help remove the emotions and help your long-term profitability. Now, of course, guys, we're going to talk about all this information, guys, in our live trade room. Now, once again, guys, the European session has been suspended until further notice. So the European session has been suspended. We're now just trading the U.S. session. We will go back to the European session once we see some more volume back in the market. Tomorrow's a Thursday, so tomorrow we have a free webinar at 11:30 a.m. Eastern Time in our trade room. And as always, guys, I want to encourage you guys to pick up a copy of the beginner's course. So tomorrow morning in our live trade room at 7:45 Eastern Time, we open up. We, of course, will go over how we place our protective stop, how we trail our stop, and of course everything in between about how we build consistency and of course confidence in our trading to avoid these mistakes we make as day traders. Now here in the trade on the Russell, guys, symbol TF was our first two trades of the day, guys. As you saw this morning, if you're with us in the room, we had a very quiet morning this morning, choppy back and forth, really didn't see very many quality patterns. My charts froze a couple times. It was kind of a tough day on us here in the room today. We were able though to grab a little bit of profit of the market though before the morning ended up. Our first trade today, guys, was a winner at 10.17. This was a two-step short. Now, you'll notice, guys, we marked this swing low here at 21.1. We're waiting, of course, now for price to break below that 21.1, add some follow-through. And again, guys, head to our YouTube page and search for that term follow-through, and you'll get all the videos we've done on follow-through. So we looked for follow-through below 21.1. Of course, momentum was down. We had increased speed of the tape. It was almost the perfect trade here that we could have taken. Now, we had to get below, right below that trigger line there. Right, that trigger line was kind of our level of support there. We had to get below. See that yellow line there, right below 21.1? That thin yellow line had to get below that first. Once we saw that go below, then we could, of course, get to the downside here. Once we had gone past our level of support there, which was just above there, right at about 21 even, 19.9. All right, sorry, about 20.9. So, of course, as you can see, guys, that two-step short, 21.1 was the level, 21.9 was our entry there. Took targets there at 4 ticks, moved our stop down to point of entry, and we got bounced out of that trade. All right, there's our first trade there, guys. 80 bucks, 8 ticks there on the Russell to get us started. Wasn't on the rafter, gave that money right back to the market. Now, this was the example I was talking about, guys, where I made that mistake. Right, made a mistake here early at let's see here, about 10.37 on a two-step long on the Russell. Entry here was at 20.4. This was an early exit at a negative 2 ticks, which of course cost us at 4 contracts, cost a total of 8 ticks there. So we made 8 ticks on the first trade, 10.17. 20 minutes later, we gave those 8 ticks right back to the market above that swing high there at 20.1. As you guys can see, looking for that two-step long here, going against that short-term downward trend that developed after that previous two-step short. So a small mistake here. The mistake I made was, right, momentum was not, it was curl, but it was about ready to curl over to the downside, so it was a little bit overbought. I realized that mistake right away. Price was not moving our direction. I cut the losses early and got out for a small loss instead of a full loss. All right, let's keep it going. Now, after we closed down the room, we opened up for our members this morning. 11:30, we do members training, and of course, just in time to see this crude trade. We've been watching this two-step in the crude for about half an hour here, and we finally saw the crude set up for this two-step short, 11:49. So just as we opened up members training, guys, at two-step short on the crude at 80.42. 42 was our fill. We took again, right, another one of these small winners here, plus 4 ticks, got scratched out there for their 8 ticks. That's 80 bucks in your pocket. So we made 8 ticks, gave back 8 ticks, made the 8 ticks right back. So we ended up on the end of the day here, at the end of the morning, up 8 ticks here on crude, which of course is your $80 total for today. Now, as always, guys, we're going to show you guys how we take these trades in live in real time. Come out and join us tomorrow morning, guys, for our live trade room. Opens up at 7:45 Eastern Time, Monday through Friday. Again, the European session is suspended until volume returns at 3 a.m. Want to encourage you guys to come join our free trial, a free 3 weeks as part of our trial. And of course, the beginner's course is recommended for free trial members. Please rate and comment on this video. And as always, guys, drop us an email for more information about lifetime membership. That's right, lifetime membership. That's sales@schooloftrade.com. My name is Joseph James. Don't miss a tick tomorrow, guys. We'll see you guys in the room tomorrow morning, 7:45 a.m. Eastern Time. Bye-bye for now.